Morning everybody, Dwayne Shepherd here, DRFX Forex Swing Trading. The last time we took a look at the Euro US dollar pair, we had noted that the pair had broken the outer uptrend line as well as the pennant setup at the inner uptrend line. Having seen this breakout below the uptrend line, it was a strong indication that the overall downtrend in favor of the US dollar was going to continue. However, there was going to be an expected pullback that would take place at what is known as the breakout equivalent. This is an area at which all breakouts from consolidations, no matter their size, tend to either pull back to reverse the movement altogether or take a brief pause and possibly move sideways and maybe even a little bit of a pullback before resuming the breakout over the next couple of days. So on Tuesday, this is what I had seen and anticipated, that even though we were bearish, it would have been a little bit risky for us to have entered at this area because of the expected pullback. Now, after Tuesday and during the rest of the week, this is what had taken place as expected. As you can see here, the market started to pull back with some weak but still bullish candles to indicate that we're not quite ready to continue the downtrend in favor of the US dollar. This breakout equivalent is something that you will see across the market with all consolidations, and it is one of the things that I take into consideration whenever I'm trading these breakouts and whenever I'm setting my targets. Taking a look at a previous example on the New Zealand Swiss franc, earlier, or actually towards the end of last year, this pair had a breakout on its on a pennant setup on its daily chart. Here we see that the bullish signal was given to indicate that we were ready to go long. Now, having identified the potential for this trade, I then identified the breakout equivalent for this pennant setup, and then set my targets with that in mind. Here we see on the 4-hour chart that my entry was set and my stop loss was placed below the small pennant setup that was on the 4-hour chart. My target was set at this area, which would coincide with the breakout equivalent, and then a few days later the market actually overshot my initial 200 pip target to provide me with a 231 pip gain. Now, as you can see here, this trade was actually helped by a market spike that actually carried the trade beyond the 200 pip target, and as you can see here from the candles on the right, the market actually gave us an indication, or appeared to indicate, that the breakout was going to continue way beyond this level here. This would have tempted a lot of traders who may not have realized that the market was actually going to pull back because it had hit that breakout equivalent. And what actually took place was that the market reversed as expected. Now, obviously, this was an extreme example of pullbacks that take place at that area, at that breakout equivalent. This was a result of the action of the Swiss National Bank to remove the currency peg with the euro, and of course we all know what took place and the unfortunate repercussions of that action. As I said, this is an extreme example of what takes place, but in general, you do find that the market will pull back at that breakout equivalent for consolidation breakouts. So it's very important to spot these areas and to know that your profit target should be set at that area, and that any entry at that area is going to be risky, no matter how strong the candles appear to be, and no matter how how strong or how likely or well or how much is on offer from the market if it were to continue along this direction. You always have to take into consideration the fact that it will pull back at this area here, and even though it's going to continue, you need to take into consideration this expected pause. So what is likely to happen is that if this downtrend is going to continue, the market will eventually produce another bearish signal at this area here to continue the movement bearish. So as it is now, the bears are in control, and by all indications, this sharp downtrend and the breakout from the major consolidation set up on the daily chart is likely to continue. However, we need to be patient and wait until the market produces that bearish candle, that bearish U-turn, to then provide us with an opportunity to trade. So let's wait for a couple of days and hopefully we can get a strong trading opportunity. All right, take care.